What are the tax implications of buying and selling Wayne Gretzky memorabilia? If you are considering buying or selling Wayne Gretzky memorabilia, you might be wondering about the tax implications involved. Let's break down what you need to know. When you sell memorabilia like game-used sticks or jerseys, any profit you make is subject to capital gains tax. This tax applies to the difference between what you sold the item for and what you originally paid. So, if you bought a Gretzky stick for $100 and sold it for $300, you have a $200 profit. This profit is taxable income. To calculate your capital gain, you take the sale proceeds, subtract your original purchase price, and then subtract any selling expenses like auction fees or commissions. This will give you the amount you need to report on your taxes for that year. Now, it is important to note that collectibles, including sports memorabilia, often face a higher capital gains tax rate than other investments. In the United States, for example, profits from collectibles can be taxed at a maximum rate of 28%. This is higher than the typical 20% rate for most other securities. So, selling valuable Gretzky memorabilia could lead to a hefty tax bill. If you purchase the memorabilia for personal enjoyment rather than as an investment, it is classified as personal use property. Gains from personal use property can still be taxable if the item appreciates significantly. However, losses on personal use property usually cannot be deducted. When it comes to gifting memorabilia, the value of the gift may be subject to gift tax rules if it exceeds the annual exclusion amount, which is currently $17,000 per recipient in the United States. Gifts also count against your lifetime estate and gift tax exemption. If you pass memorabilia to heirs, they receive a step-up in cost basis to the fair market value at the time of your death. This means that if they sell the item shortly after inheriting it, they may avoid capital gains tax. Keeping detailed records of your purchase prices, dates, and any expenses related to buying or selling Wayne Gretzky memorabilia is essential. This will help you accurately calculate your capital gains and minimize your tax liability. For collectors, it might be wise to hold onto memorabilia long-term to benefit from a stepped-up basis at inheritance. You could also consider gifting items to family or donating to charity to reduce the taxable value of your estate. Be aware that high-profile sales, like Gretzky's stick, selling for over $300,000, can trigger substantial tax obligations. Consulting with tax professionals who understand collectibles can help you optimize your tax outcomes. In summary, buying and selling Wayne Gretzky memorabilia involves careful attention to capital gains tax rules, higher tax rates on collectibles, and estate planning opportunities. Planning your transactions with tax consequences in mind can help you manage potential liabilities effectively.